15th March 2001, level 3356 Pitt Street, Sydney. Two KPMG receivers ride the lift to the headquarters of Australia's largest insurance company and ask for the keys. The company they are about to take over has lost $800 million in 6 months. By nightfall, 2 million Australian policies are worthless. 1,000 employees are jobless. The total deficiency is 5.3 billion Australian dollars. Australia's largest corporate collapsed to that date. This is not a foreign takeover story. There was no Atlanta. There was no London. There was no Wall Street raider. The decision that killed it was made in a Sydney boardroom one Tuesday evening in September 1998 by Australians for Australian shareholders. A Hungarian refugee whose father died in a Nazi camp built half this empire. His son helped destroy it. The Royal Commission report sits in 3 volumes on a Canberra shelf. Chapter 1. Two Boys, 1949. The Great Depression hit Budapest in 1929. 12 years later, Hungary entered the Second World War on the side of Nazi Germany. The Hungarian Jewish community of Budapest was deported to the death camps in 1944. One of the men who died in those camps was the father of a 13-year-old boy named Lawrence James Adler. The boy survived. So did his mother. Larry Adler was born in Budapest on the 2nd of November 1931. He was 7 when the war began. He was 12 in the spring of 1944 when the Hungarian Jewish community began to be deported. By 1949, 17 years old with limited English, Larry Adler fled west. He reached Australia in 1950. He arrived in Melbourne with no money, no English and no family. Railway labourer, taxi driver, janitor, property speculator. In 1960, he founded a small insurance underwriting agency in Sydney and called it Fire and All Risks Insurance. FAI. That same year, in Sydney, a 12-year-old named Raymond Reginald Williams was finishing primary school. The biographical record of Ray Williams's early life is thin. He was born in 1937. His father's occupation is not recorded in any source we can verify. He did not attend an elite school. He did not appear in the Sydney social pages. What we do know is what he did for a living before he founded HIH. By the late 1960s, Ray Williams was the Workers' Compensation Manager at the New South Wales Water Board, a state government utility, a salaried job. He wrote claims for council pipe workers who slipped off ladders. The man who would later be sentenced for misleading shareholders had begun his career at a public service desk, processing claims for Australians who got hurt on the job. In 1968, at 31, he left the Water Board to start his own underwriting agency with a partner named Michael Payne, a Lloyd's of London underwriter. 2 boys, 2 countries, both 1949. One had fled the Holocaust with nothing. The other was about to finish primary school in a country not bombed since the Brisbane line. 49 years later, one would buy the other. 3 years after that, both companies would be dead. This is the story of how Australia's largest insurance company was killed, not by a foreign asset stripper or a Wall Street raider, but by Sydney's own. Chapter 2. M. W. Payne, 1968. The company that would become HIH was founded in Sydney in 1968 under a different name, M. W. Payne. Underwriting Agency Proprietary Limited. 2 men, 1 specialty, workers' compensation. The kind of insurance no large company wanted to write because the claims were long, the lawyers were patient and the margins were thin. Williams was the M in M. W. Payne. The W was Michael Payne. The agency wrote workers' comp for small Australian businesses through the late 1960s and early 1970s, building a profitable book in a category the major insurers had abandoned. In 1971, 3 years after they opened, the agency was acquired by C.E. Heath plc of London. The Australian boys had been picked up by a British parent. That parent had a history. C.E. Heath was the firm of Cuthbert Eden Heath, born 1859, died in London in March 1939, 6 months before the Second World War began. Heath was the most influential underwriter in the history of Lloyd's of London. He wrote the first burglary policy, the first all-risks policy, the first earthquake policy. In 1907, he devised excess of loss reinsurance, the financial instrument that made modern catastrophe insurance possible. The Lloyd's official history calls him the father of modern non-marine insurance. In April 1906, an earthquake destroyed San Francisco. The American insurance industry tried to wriggle out on technicalities. Heath sent a cable from London to his American agent. 6 words. Pay all of our policyholders in full, irrespective of the terms of their policies. Lloyd's paid the equivalent of over $1 billion in today's money. The reputation of British insurance was made on that one sentence. 95 years later, the Australian company that had inherited his name would die unable to pay anyone. A note on what we have not found. We searched the Department of Veterans Affairs nominal roll for Ray Williams. We found no record. He was 4 when Pearl Harbor was attacked and 8 when Hiroshima ended the war. He did not serve. Michael Payne's wartime record we could not locate. Heath died 6 months before the war began. There is no foundry honour roll here. There is a refugee, a workers' compensation lawyer who knew Williams personally. Robert Hawke, not the Prime Minister, the insurance lawyer, was interviewed in 2021. Verbatim. It's a classic hubris, nemesis and catharsis Greek tragedy. If he'd just stuck to doing workers' comp, HIH would probably still be with us, and Ray Williams would never have gone to jail. He didn't stick to workers' comp. Almost nobody does. Chapter 3. The Float, 1992. By 1980, 12 years after he co-founded the agency, Ray Williams was sitting on the board of C.E. Heath Purcell in London. The Sydney boy with no school record had been promoted to the British parent. In 1989, the Australian operations were reorganised under C.E. Heath International Holdings Limited. In 1992, that entity floated on the Australian Stock Exchange, the first partial float of a general insurance company on the ASX. Williams was its managing director. For the next 4 years, the share price climbed. The company acquired CIC Insurance Group in 1995, American Workers' Compensation Operations, under the name Heath Carl, and expanded into the United Kingdom, New Zealand, Argentina and Hong Kong. By the late 1990s, HIH was writing insurance in 6 countries. In May 1996, after a partnership with the Swiss insurer Winterthur, the renamed entity became HIH Winterthur. By July 1997, the share price had peaked at $3.70. Standard & Poor's rated it AA-. Ray Williams was the longest-serving general insurance chief executive in Australia. In the 1996 Queen's Birthday Honours, Williams was appointed a member of the Order of Australia, AM. The citation was for services to business and charity. Charities across Sydney had his name on their donor plaques. The man who would later have the medal taken off him was getting it pinned on now. In August 1998, Winterthur divested its 51% stake in a public offer. The new name was simpler, HIH Insurance Limited, Australian-owned, Australian-listed, Australian-controlled. By June 2000, the company would hold 9.3% of Australia's gross written insurance premium, $1.65 billion of a $17.7 billion industry. The company that had begun life as a workers' compensation agency in 1968 was now Australia's largest direct general insurer. If you have watched our McCafferty's video, you know what can happen when a board decides a successful Australian name needs to be replaced with someone else's. HIH was about to do the opposite. It was about to spend nearly $300 million on a name it didn't need, owned by a man who would not let it look at the books before signing the cheque. 1 month later, on a Tuesday evening in late September 1998, the directors of HIH Insurance Limited met to vote. Chapter 4, 22nd September 1998. The board paper went out the same day as the meeting, late afternoon. 12 directors were entitled to attend. By the time the meeting was called to order in the boardroom on level 33 of 56 Pitt Street, 5 of the 12 were not in the room. The chairman was Geoffrey Cohen. The deputy chairman was Charles Abbott. The CEO was Ray Williams. The CFO was Dominic Federa. Senior Arthur Anderson partners were also at the table, the same firm that had audited both HIH and FAI. The proposal was to acquire FAI Insurance, Larry Adler's company, now run by his son Rodney, for approximately $295 million in cash and scrip. Approximately $275 million was goodwill. The remaining $20 million was tangible asset value. HIH had circled FAI since the early 1990s. Every previous attempt had collapsed for the same reason. Rodney Adler refused all access to the books. He would not let HIH's auditors look at FAI's reserves. He would not let HIH's actuaries review the outstanding claims. He would not let HIH's lawyers see the reinsurance treaties. This time, HIH proceeded anyway. The mechanism was a 5-step sequence the Royal Commission reconstructed 3 years later. Step 1. The papers were circulated the same day, hours, not weeks, to read them. Step 2. No due diligence on FAI's books. Adler refused. Step 3. Arthur Anderson audited both companies. Senior Anderson figures sat on the HIH board. No independent auditor in the room. Step 4. 5 of the 12 directors were absent. Step 5. The directors voted yes. By the time the meeting closed, HIH had committed to spending approximately $295 million on a company none of the directors present had inspected. What the 7 men in the room did not know was that FAI had spent the previous 12 months engineering its own balance sheet. FAI had used disguised loan reinsurance contracts, known in the industry as side letters, to book approximately $27 million of phantom profit immediately before the sale. The profit was an accounting fiction. The Royal Commission's later finding was a single number. Justice Neville Owen, the Royal Commissioner, wrote in his April 2003 report, verbatim, "My estimate of the directly quantifiable loss suffered by HIH due to the acquisition of FAI is $591 million. Read that again. A boardroom that lost $591 million in a single evening's vote. Rodney Adler walked away from the FAI sale with approximately $24 million in cash, scrip, a termination payment and consultancy fees. In January 1999, 4 months after his company was acquired, he joined the HIH board. He had sold them a company that was already broken. They had paid him to come and watch them die. McCafferty's bought the rebuilt coach that killed 35 people. HIH had just bought the company that would kill the buyer. Chapter 5. The Trap Tightens. The 2.5 years between January 1999 and March 2001 were the slow death of HIH Insurance Limited. In June 2000, an investment vehicle called Pacific Eagle Equities, controlled by Rodney Adler, bought parcels of falling HIH shares on 3 separate days, the 15th, 16th and 19th of June, using approximately $10 million of HIH's own money. The purpose, the Royal Commission later found, was to create a false impression that an independent buyer was supporting the share price. Adler did not disclose his control of Pacific Eagle. He would later plead guilty to 4 charges arising from those 3 trades. The man who controlled the company bought his own falling shares with the company's own money, to make it look like somebody else was buying them. Read that again. In July 2000, Arthur Andersen completed its annual audit of HIH and signed off the accounts. Shareholders' equity was reported at $939 million. Of that, $703 million was intangibles, goodwill, deferred acquisition costs, software, brand value. Approximately 75% of the reported equity was wallpaper. The actual tangible asset backing was $236 million. In September 2000, HIH announced a joint venture with the German insurer Allianz. The share price dropped. In October and November 2000, Westpac forced an independent audit by Ernst & Young. The verdict was 2 words: delicately poised. In December 2000, Ray Williams resigned as Chief Executive Officer after 32 years. The man who had founded the company walked away 11 weeks before the receivers walked in. On 1 January 2001, the Allianz Joint Venture Trust commenced operations. Cash from HIH's retail premium income began flowing into the joint venture account rather than HIH's own bank accounts. The cash flow that had kept the company solvent for 33 years was now sitting in a structure HIH no longer fully controlled. In a lost legacy catalogue full of foreign asset strippers, this is the rarest of corporate self-killings. Williams's final move starved his own company of its own money. If you have watched our Brad Mill video, you know what 1999, 2000 and 2001 looked like in Australian boardrooms. Bradford Cotton Mills, Brad Mill Denim, Harris Scarf, One.Tel, Joyce Corp, HIH, the same Sydney lawyers, the same auditors, the same banks. The collapse wave was not an accident. It was a culture. Chapter 6. The 20-Day Death. The dates that follow ran like a heart monitor flatlining. 22nd February 2001. The ASX halted high trading. Resumed 26th February. Halted again 27th February. 1st March 2001. APRRA, the federal regulator founded 3 years earlier specifically to prevent something like this, issued HIH a show cause notice. ASIC issued a continuous disclosure notice. The shares were suspended from the ASX permanently. What APRA had finally noticed was something it could have noticed 5 years earlier. HIH's overseas operations had been bleeding for years. By early 2001, combined British and American losses were estimated at over $2 billion Australian dollars. When the joint venture with Allianz removed the Australian cash flow, the props came out. 6th March 2001. HIH announced a second joint venture with QBE. KPMG was appointed to review the books. 14th March 2001. HIH sold its workers' compensation portfolio to NRMA. A Supreme Court application was filed in Sydney to commence the winding up of HIH Casualty and General Insurance Limited. That same evening, an HIH accountant was dispatched to the after-hours processing centre of a Sydney bank with a cheque for $181,455. The cheque had been signed by Charles Abbott, the Deputy Chairman of HE. It cleared at 7:42 p.m. The next morning, the company was gone. Charles Abbott would later face a single charge over the timing of that cheque. The charge was dismissed at committal in 2004 by Magistrate Margaret Quinn. He was not convicted. We state this clearly. 15th March 2001. The afternoon. Anthony McGrath and Andrew McIntosh, partners of the accounting firm KPMG, were appointed provisional liquidators of HIH Insurance Limited. They rode the lift to level 33 of 56 Pitt Street. They took possession of the files. 2 million policies were now worthless. Approximately 1,000 HIH employees were jobless. Standard & Poor's slashed the company's credit rating to B, then withdrew coverage entirely. The provisional liquidator Tony McGrath, asked to summarise the cause of failure, gave one of the most cited corporate epitaphs in Australian business history. Verbatim, rapid expansion, unsupervised delegation of authority, extensive and complex reinsurance arrangements, underpricing, reserve problems, false reports, reckless management, incompetence, fraud, greed and self-dealing. 11 words, one company. Chapter 7, The Victims. This chapter has to be told carefully. He was not just an insurance company, it was the largest builder's warranty insurer in Australia. It was the largest workers' compensation underwriter in New South Wales. It was the public liability insurer for thousands of councils, sporting clubs, small businesses and not-for-profits. When HIH died on the 15th of March 2001, every one of those policies died with it. Almost $2 billion of construction was frozen overnight. New South Wales councils were left with $65 million of uncovered public liability claims. In Queensland alone, car accident victims insured with HIH were left waiting for operations and medical procedures worth $190 million. The Australian Rugby Union scrambled to replace its public liability cover through QBE before the start of the Super 12 season. But the numbers are not the story. The story is the people. In May 2001, the Australian sent journalist John Stapleton with Ashley Wilson to interview HIH collapse victims about the Royal Commission. They found a family in Brisbane. The daughter was Claire Purcell, 19 years old. 4 years earlier, she had been a netballer. A netball accident had left her with an injury that had not fully healed. By May 2001, she was off work, on crutches, on painkillers. Later that week, she was due to have an MRI scan at an upfront cost of $500. Her insurance claim had been with HIH. It was now with the liquidator. Her mother, Patricia Purcell, delivered the family's verdict on the Royal Commission, verbatim, to the Australian on the 22nd of May 2001. Under oath, we hope to hear the truth. This will not help our family going through the suffering we have, but hopefully it will stop others going through the same. The whole matter is wrecking my daughter's life. The kids are the ones being affected the most, being eaten up by the big boys. Eaten up by the big boys. A 19-year-old former netballer on crutches paying $500 out of her own pocket for an MRI scan because the company that should have paid for it had gone to provisional liquidation the same week. Patricia Purcell also wanted the Royal Commission to ask one question. Verbatim. What have the independent auditors been doing through all these processes? I blame them. They must have been called in to study the FAI books before HIH purchased the company. She was right. They had been. They had signed. There was a second named victim in Stapleton's article, a 61-year-old former senior manager named Jim Punchard. He had worked for the Consolidated Bearing Company. He had diabetes. He had lost the feeling in his feet and legs and had been forced to quit his job. He had taken out salary continuance insurance with HIH for exactly this contingency. When HIH collapsed in March 2001, his fortnightly payments stopped. He was left on a Centrelink invalid pension of $140 a week. Jim Punchard's verdict on the Royal Commission, verbatim, to the Australian on the 22nd of May 2001. I certainly haven't got any better yet. I'm still a bloody invalid. Just because they've called a Royal Commission, that doesn't get you any money. There were more like Jim Punchard. The Royal Commission's findings record that sick and disabled policyholders on HIH salary continuance policies stopped receiving payments they relied on. There were home buyers staring at half-built foundations after HIH warranty insurance vanished. There was the Reverend David Smith of Holy Trinity Anglican Church in Dulwich Hill, whose youth centre had been insured with HIH for public liability, facing personal bankruptcy. The federal government responded in 2 stages. On the 17th of May 2001, HIH Claims Support Limited was registered. On the 21st of May 2001, Prime Minister John Howard announced a Royal Commission and a federal assistance package worth more than $500 million. The Appropriation HIH Assistance Act 2001 ultimately capped Commonwealth funds at $640 million, NSW Premier. Bob Carr was not impressed. Verbatim, June 2001. "I think they've got friends in the insurance industry and they're protecting them. The whole thing's too cosy. Victims are entitled to feel that this is a conspiracy between the insurance industry and the Howard government." It was not enough. It was never going to be. Chapter 8. The Witness Box. 8 August 2001. The Royal Commission into the failure of HIH Insurance was formally established. Justice Neville John Owen of the Supreme Court of Western Australia was appointed sole Royal Commissioner. 11th September 2001. Public hearings opened in Sydney. Half a world away in New York, the World Trade Center towers were on fire. HIH had already been dead for 6 months. The dates simply rhymed. 8 October 2002. A former HIH executive named Randolph Wine was killed in a hit-and-run on a Hong Kong street, 3 weeks after testifying to the Royal Commission. Wine had told the Commission that HIH's reserves had been inadequate as early as 1995. The Hong Kong police investigation did not produce a charge. "We state these facts. We do not speculate." 16 April 2003. Justice Owen delivered the Royal Commission's final report. 3 volumes. 61 recommendations. 56 possible breaches referred for prosecution. Justice Owen's central finding. Verbatim. "There was a culture of apparent indifference or deliberate disregard on the part of those responsible for the well-being of the company. Management failures were the direct consequence of a sick corporate culture." The convictions began with a civil case 3 years before the criminal trials. In late 2001, ASIC filed civil proceedings in the New South Wales Supreme Court against Rodney Adler, Ray Williams, Dominic Fodderer and Adler Corporation. The case was ASIC v. Adler. It focused on the June 2010 $1 million payment from HIH Casualty and General Insurance Limited to Pacific Eagle Equities. Justice Kim Santow handed down judgment in March 2002. Adler and Adler Corporation were ordered to pay pecuniary penalties of $450,000 each, $900,000 in total. Williams was ordered to pay $250,000. Fodderer was ordered to pay $5,000. Adler and Williams were jointly ordered to pay $7,986,402 in compensation to HIH Casualty and General Insurance Limited. Adler was banned from acting as a director of any Australian company for 20 years. Williams was banned for 10 years. The New South Wales Court of Appeal upheld Justice Santow's findings in 2003. That was the civil case. The criminal trials came next. Rodney Adler pleaded guilty on 16 February 2005 to 4 charges, 2 counts of disseminating information known to be false, 1 count of obtaining money by false or misleading statements, and 1 count of being intentionally dishonest and failing his duties as a director. He was sentenced on 14 April 2005 by Justice John Dunford of the New South Wales Supreme Court to 4 years and 6 months, with a non-parole period of 2 years and 6 months. Justice Dunford's verdict, verbatim, an appalling lack of commercial morality. Ray Williams was sentenced the next day, 15 April 2005, by the same court to 4 years and 6 months, with a non-parole period of 2 years and 9 months. He pleaded guilty to misleading shareholders and was banned from leading an Australian corporation for 10 years. The sentencing judge found that Williams had not sought nor gained any financial advantage for his business mistakes, and that his criminal negligence was not the result of deliberate deception. Brad Cooper, a car salesman who left school at 14 and built a high-flying Sydney lifestyle as chairman of FAI Security Group, was convicted by a New South Wales Supreme Court jury after a 44-day trial before Justice Bruce James on 6 counts of corruptly giving benefits and 7 counts of publishing false or misleading statements. The Crown case was that Cooper had paid Bill Howard approximately $120,000 in bribes in return for HIH paying out a $4.9 million debt and forgiving a further $1.79 million debt, $6.7 million total. He was sentenced on 23 June 2006 to 8 years. It was the longest HIH sentence. Cooper maintained his innocence. His appeal was dismissed. Terry Cassidy, former head of HIH Australia, pleaded guilty to 3 charges and received 15 months. Dominic Fodera, Chief Financial Officer, was sentenced on 7 June 2007 to 3 years for a material omission from a 1998 convertible notes prospectus. Bill Howard, HIH Finance General Manager and Brad Cooper's bribery target, pleaded guilty to 2 charges. He received 3 years suspended in December 2003 for cooperating with the prosecution. 6 HIH figures were convicted, 5 of whom were sent to jail. Charles Abbott, the deputy chairman, faced a single charge over the 14 March 2001 cheque, but the charge was dismissed at committal. On the steps of the Sydney courthouse on the afternoon of 14 April 2005, Rodney Adler, about to be transported to prison, addressed the press. He said, verbatim, "I explained it to my kids this way. I said to them that when I punish one of you and I punish you to your room for a couple of hours, you may agree or disagree with that punishment. But then you come out. The government of Australia is punishing me today." He was 45 years old. In 2006, Ray Williams' Order of Australia was cancelled by order of the Governor-General. Charities across Sydney removed his name from their donor plaques. Read that again. A man decorated by his country in 1996, stripped of the medal by the same country 10 years later. Chapter 9. The Mansion. This chapter is about a house. The luxury home was at Balmoral, on Sydney's lower North Shore, with views of Middle Harbour. The valuation in May 2001 was $7 million. The title was in the name of Rita Williams, Ray's wife. The transfer of the millions of dollars used to acquire the house from Ray Williams to Rita Williams had occurred in the years before the HIH collapse. In May 2001, 8 weeks after the company collapsed, the Channel 9 current affairs program A Current Affair sent a journalist to inspect the house. The journalist impersonated a potential buyer, gained access to the interior and filmed it. The footage aired nationally. Electronic curtains, large white couches in the master bedroom, expansive views of the harbour. The reporter Mike Monroe defended the broadcast in a statement to The Australian on 29 May 2001, on the basis that the house was a financial asset ready for sale. The program then arranged for a small group of HIH collapse victims to watch the footage on camera. One of them, while watching the interior of the Williams mansion, was filmed delivering one sentence. "It leaves me speechless to see people living like this." Rita Williams's verdict on the broadcast, in a statement to The Australian, was that it had been a gross invasion. "My family's privacy and basic human rights have been abused. It is hard to imagine a more compressed image of the Australian corporate collapse." A $7 million house on Sydney's lower North Shore. A diabetic in Brisbane on $140 a week. The two of them watching each other on national television. Ray Williams was declared bankrupt in 2007. The Balmoral house was eventually sold. The transferred assets were ultimately recovered by the bankruptcy administrators and trustees. On 14 January 2008, with media helicopters circling overhead, Ray Williams was released from Silverwater Correctional Centre on parole. He was 71 years old. The Brisbane Times that morning ran a headline by journalist Lisa Carty: "No more cleaning toilets for former HIH boss." The man who had once sat on the board of HIH in London, the firm of the man who had paid every San Francisco quake claim in 1906, had spent 2 years and 9 months in Silverwater cleaning toilets. His statement to the press outside Silverwater was, "I am very sorry. The financial loss suffered was the last thing in the world I would want." Rodney Adler had been released 3 months earlier, on 13th October 2007. He gave an interview to the Bulletin magazine that December. He said, "Darwinian, degrading, outdated, boring and pointless." On his own fall, he said, "I lived a charmed life. For a decade, everything I did made incredible money. I had the Midas touch. I think that God, or a higher source, decided I was ahead of myself and decided to teach me humility." The mansion stood. The diabetic remained on Centrelink. The names came off the donor plaques. Chapter 10. What replaced it? There is no HI bus parked in an airport. There is no Austral 4946 in a museum. There is no McCafferty Park. What replaced HI is harder to photograph. It is a federal law. In 2008, 7 years after the HIH collapse, the federal parliament passed the Financial Claims Scheme. The scheme is a statutory safety net administered by APRA. Under it, holders of general insurance policies issued by an Australian general insurer can claim from the Commonwealth if the insurer fails. The cap is sufficient to protect the typical retail policyholder. The Financial Claims Scheme exists because of HIH. It was designed specifically so that another diabetic on Centrelink cannot be left with no fortnightly payment because his insurer's reserves were a lie. APRA itself was overhauled. The Howard government accepted the bulk of Justice Owen's 61 recommendations. Tort law was reformed across the states under the IP review. The audit profession was restructured globally after Arthur Andersen's own collapse, 18 months after HIH's, over Enron. The hero artefact in this story is not a bus, it is a law. HIH's headquarters at level 33, 56 Pitt Street remains a commercial office tower. No HIH signage, no plaque. The Reverend David Smith's Youth Centre in Dulwich Hill is still operating. Rodney Adler, 66 years old in 2026, operates a Sydney corporate advisory practice under his own name, rodneyadler.com.au. The website describes him as a corporate advisor, consultant and venture capitalist. By 2015, he was advising listed companies. By 2026, he is a regular media commentator. The man who pleaded guilty to 4 charges over Australia's largest corporate collapse is now advising the next generation of Australian directors. In 2009, Adler funded an extension to the Sassoon Yehuda Sephardi Synagogue in St Kilda, Melbourne. The naming rights were registered as the Lindy and Rodney Adler Sephardi Centre. Other donors challenged the naming in the Victorian Supreme Court. In March 2011, the court upheld Adler's naming rights. In 2013, 2 years after the court had affirmed his right to the plaque, the synagogue itself removed the signage. The community had decided what the court would not. Twice stripped. Order of Australia, 2006. Synagogue naming, 2013. Both came back off. Ray Williams, 89 years old in 2026, has not given a public interview since 2008. The ban from leading a corporation expired in 2015. He has not led another one. He retired with Rita to a quieter Sydney suburb. Chapter 11. What remains? What remains of HIH Insurance in 2026 is a small list. A 3-volume Royal Commission report on a library shelf in Canberra, a federal safety net statute on the books, a commercial office tower in Sydney with no plaque, A youth centre in Dulwich Hill still operating. A diabetic, if still alive, somewhere in Brisbane. A 19-year-old former netballer, now in her mid-40s, who paid for her own MRI scan. The villains are mostly still living. Rodney Adler, 66. Ray Williams, 89. Brad Cooper, released in late 2010, still in Sydney. Dominic Fodera, released after 2 years on a good behaviour bond. Terry Cassidy, released February 2006. No criminal conviction was ever recorded against Arthur Andersen Australia for its audit of HIH. No criminal conviction against the 5 directors, absent from the 22nd September 1998 meeting. No civil compensation order against APRA for failing to act on the warnings Randolph Wine had been giving from 1995. 3 institutions, 3 failures, one $5 billion hole. 3 lessons remain. Lesson 1. The auditor can be the villain. Arthur Andersen audited FAI and signed off accounts that said the company was healthy. The same firm audited FAI before the sale and signed off accounts that said FAI was healthy. Senior Arthur Andersen partners sat on the HIH board while doing both jobs. In 2002, 18 months after HIH collapsed, Arthur Andersen itself collapsed globally over Enron. 2 of the largest corporate failures of the 21st century on opposite sides of the planet had been audited by the same firm. Lesson 2. A boardroom can lose in an evening what a factory loses in a decade. On the evening of 22nd September 1998, 7 men met in a boardroom on level 33 of 56 Pitt Street, Sydney. They sat down at 6 o'clock. They had board papers they had received that day. They voted to spend $295 million on a company none of them had inspected. They went home before midnight. The Royal Commission's later quantification of the loss from that single evening's vote was $591 million. The McCafferty's name was deleted by a board meeting in 2004. HIH itself was killed by a board meeting in 1998. The pattern is not the factory. The pattern is the room. Lesson 3. The refugee built it. The native son broke it. Larry Adler arrived in Australia in 1950 from a Hungary where his father had died in a Nazi camp. He spoke no English. He worked as a railway labourer, then a taxi driver, then a janitor. Then he founded an insurance company that grew to be the largest in Australia. He died in 1988. His son Rodney was born in Sydney in 1959, educated at Cranbrook School, photographed for the financial press at 29. The father built the empire. The son, with help, dismantled it. November 1931. Budapest. Larry Adler is born. 1968. Sydney. M. W. Payne opens for business. 22nd September 1998. The boardroom vote. 15th March 2001. KPMG walks in. 70 years. One country, one $5 billion grave. The mayor of Toowoomba built Australia's largest coach company from a milk cart. The refugee from Budapest built Australia's largest insurer from a Melbourne taxi rank. The refugee's son walked his father's company into a wall. This is not just the story of HIH Insurance. It's the story of what happens when an empire built on paying claims forgets why it exists.